Hello everyone, welcome to this High Time Frame Weekly Auto EU. In this outlook, I'm going to walk you through this current price action and I'm going to explain the full narrative and the market context that we've got right here. And most importantly, I'll figure out and determine the directional bias and the drawn liquidity for this particular week. So looking at this monthly time frame right here, you can clearly see that for the last few months, we've had this clean and this massive expansion higher. And even this month, this current month, we continued that expansion higher. And with this expansion, with this particular candle, we've now taken out this premium swing high within this daily range. You can see that with this expansion, we entered the premium region of this daily range and we've now taken out this premium swing high, right? Now, the main question becomes what happens now? But more importantly, what happens this week, right? And this is something I need you to understand clearly. What happens the next month or 2 months from now is completely irrelevant to us as day traders or intraday traders. That's not our job. Our job is not to make predictions for the next 5 weeks or the next few months. That's not our job. Our job is to figure out exactly what is price likely to do this week so that then we can position ourselves in that particular direction on the lower time frame and find trade ideas that are aligned with that direction and then execute those trade ideas with confidence and conviction. And then once this week is done, we'll analyze the new price action and we'll build the new or the next outlook for the week after that, right? You can see that it's one step at a time and one story at a time. We're not married to monthly reversals or monthly position calls. Our job as day traders is to figure out what price is likely to target in the next few days or this current week. And that's exactly how we build a niche that's adaptable and that's repeatable, right? You need to remember that. Now, enough of that. Let's look back at this price action and let's see what we've got. If we look at this price action through the lens of liquidity framework, then what you'd see is that we've just taken out this external range liquidity or this ERL with this expansion. So now the next logical move for price is to have a retracement profile or a retracement so that we could fill some sort of IRL or internal range liquidity before price does anything further. Right? The minimum expectation for price is now to have a retracement so that we could fill IRL. Now, this retracement profile does not necessarily have to happen directly on this monthly time frame. It could happen on the weekly or the daily time frame as well. Meaning, now that we've taken out this ERL, we can expect price to fill some sort of daily or weekly internal range liquidity. But the point is, once ERL is taken, a rebalance into IRL becomes highly probable, and that's exactly what we're expecting in this particular scenario, right? Now let's look at this price action through the lens of open high low close framework. So what you can see is that we've already formed the low of the month right here during the first week, just like I had anticipated it. And since then, you can see that we've had this strong expansion higher. Now, with this expansion higher, we've not only reached the premium region of this dealing range, but also we've taken out this premium swing high. And along with that, what you can see is that we've only got about 8 days or 1 week left before this monthly candle closes. And if we dissect this monthly candle through the lens of the open high low close framework, then what you would see is that we opened right here. We then had this bearish price action below the monthly open, which led to this lower wick of the monthly candle or the low of the month to be formed right around here. And after that, we had an expansion higher. Now with this expansion higher, not only we've reached the premium region of this dealing range, but we've also taken out the premium swing high. So now with 8 days left or 1 week left before this monthly candle closes, I'm expecting the high of the month to be formed right here. And once And you know that once the high of the month is formed or the high of the candle is formed, the next logical move or the next thing that price does is to retrace so that it can form the higher wick of the monthly candle or the higher wick of the candle, and then it closes, right? We've had the expansion. I'm expecting the high of the month to be formed here. And once the high is formed, the next logical move is this retracement, which also aligns with the previous idea that I formed based on the liquidity framework, right? So this idea adds even more conviction to that, which means that the retracement profile that I'm expecting on the lower time frame is now even more probable and has even more conviction now that I've dissected this price action through the open high low close framework. But you need to remember that just because I'm expecting a retracement here, it doesn't mean that I'm expecting a full on reversal all the way down to here. No, that's not what I'm saying at all. This could happen, I don't know. But that's not what I'm claiming here. What I'm saying is that this week, the most likely scenario for price is to have a retracement profile or a reversal profile on the lower time frame. And once we get that higher time frame retracement and we fill that internal range equity on the weekly and the daily time frame, then I'll reevaluate the structure. I'll analyze the price action the next week or the next month, and then I'll decide whether price wants to go higher or whether price wants to have a deeper retracement or even a reversal. But as of right now, none of that matters. I'm not concerned with those moves for now, with those long term continuations or those long term reversal hypotheses or theories. My only focus is on what's likely to happen, what's likely going to happen over the next few days or this week. That's what matters to me, right? Now let's drop down to the weekly time frame and let's define this whole analysis even further. Looking at this weekly time frame right here, you can see that the narrative in the market context is pretty much the same as the monthly. We've taken out this ERL or this external range liquidity, and now I'm expecting price to have a retracement profile so that we could fill this weekly fair value gap or this weekly internal range liquidity. And that this weekly internal range liquidity becomes my first short-term drawn liquidity or my first short-term target. And you can see that it also aligns perfectly with the open high low close framework. We've had a clean expansion higher for the last couple of weeks, and now with this week being the final week of the month, the most probable move is a retracement. And once that happens, I'll reanalyze and decide whether we continue higher or not. Boom, boom, right? Just like I said before. Also, you can see that we've got this weekly premium order block as well, and we are reacting to that. And this weekly premium key level in the form of this weekly order block becomes a catalyst for this retracement profile lower. And along with that, if we look at the DXY chart, then what you would see is that we have this major SMT divergence. You can see that on EU, we've taken out this ERL or this high, but on DXY, we failed to took out this corresponding low, which means that we have non-symmetry, and that non-symmetry has led to this divergence between these two. This divergence adds even more conviction to this retracement idea that I formed, right? That's my expectation. So with all of that in mind, my directional bias is bearish for the short term. I'm expecting a retracement. And yes, this whole narrative could change or might change, and I'm completely open to that. Maybe price could start expanding higher straight away or immediately from here without doing any of that, or maybe price could have a straight reversal from here. Any of that could happen. All of those unexpected scenarios could happen, and I'm open to that. I'll just readjust my expectation and anticipation for price, and I'll flip my bias. I'll just build a new narrative around it. And that's the point. It's not about being right or wrong, it's about reacting to what the market is trying to tell you and then executing it within your system. Executing within those conditions that you deem high probability based on your protocols and based on your guidelines that are within your system. And this isn't a game of prediction. The only reason we are doing all of this analysis is just to build a directional bias, right? It's a game of alignment and then adoption. And if price does something else, or if price does opposite of what you were initially expecting, then it doesn't mean that you are wrong. It just means that price wanted to do something else. And in that particular scenario, you shouldn't start panicking, or you shouldn't feel betrayed, or you shouldn't feel like you now need to revenge trade, or you now need to do something else, right? That's the wrong approach. What you need to do in that sort of situation or that sort of scenario is just accept that price did something else. And instead of letting your ego being hurt by that, you should just adapt to that new price action, build a completely new narrative around that price action, build a new market context, and determine the next directional bias and start executing with consistency and discipline without letting your sentiments or your emotion being involved in that whole process. Looking at this monthly time frame, you can see that the narrative and market context is pretty much the same. So now let's just drop down to the 4 hour time frame and let's see what we've got there. Now looking at this 4 hour time frame, what you can see is that we've taken out this range high of this external range liquidity. We've also tapped into the weekly premium key level, and now from here I'm expecting price to push lower towards this drawn liquidity. This is my drawn liquidity for this particular week. Now on Monday, I stayed completely risk off. Why? Because up until that point, the order flow was still extremely bearish, bullish actually, and I didn't have any confirmation or any bearish confirmation signals in the form of a bearish CSD or change in the state of delivery or any SMT divergences. Right? I didn't have any of that yesterday. So for me, it didn't make any sense to jump into shorts blindly. I needed a proper bearish confirmation before I could enter. Right? Now, my expectation today on Tuesday was for price to take out this high, this Monday's high, and then from here, then form the high of the week here, and then have a weekly range expansion lower. That was my initial expectation before London Open. But what actually happened was that we had an SMT divergence with GU, which is even better because not only I have a CSD here in the form of price closing below this particular candle. This is the candle that tapped into the weekly premium key level. And now that we've closed below it, we now have a bearish CSD. And along with this, we also have an SMT divergence with GU. But you can see that GU took out this high, this corresponding high, but EU failed to do so, which means that there is non-symmetry here. And because of this non-symmetry, I'm expecting a reversal from here on this lower time frame, right? My initial expectation was for price to take out this Monday's high, but what actually happened was even better because now we have this SMT divergence here, right? And because of all of these factors and because of the whole higher time frame market context and narrative, I'm expecting a weekly range expansion lower. And for the rest of the week, my directional bias is going to be bearish, and I'm going to be specifically and particularly looking for bearish trading ideas or bearish entry opportunities, right? That's the higher time frame weekly outlook for EU for this week. Now, if I founded any trade ideas or trade setups here for the rest of the week, I'll make sure to share it with you inside TC.